So welcome to the latest episode of the MoneyWise UK podcast. I'm your host, George, and I'm delighted to be joined today by David McNeil of Castlebay. We've known each other for over many years and have helped each other through our regular catch-ups, something that I definitely benefit from. Castlebay celebrated its 10th anniversary, marking a decade of running its quality value UK fund. However, the business has evolved significantly since I first spoke with David. In this episode, what I want to do is explore David's journey as a business owner. I want to look at the challenges and opportunities at Castlebay, the impact of regulation, industry consolidation, and what sets Castlebay apart in the investment landscape. David, welcome to the podcast. I always like to kind of just come in gently, easy, just ask people about their kind of backgrounds, particularly with you, is how you got into the investment world and what's inspired you on your journey.
Hi, George. Thanks for having me on. I'd also say that, our chats over the years have helped me as much as you. So, I really appreciate that as well. And I think when you're in the world of investing, every day's a learning day. So it's been a great help to chat. Yeah, so I guess at school, I had a friend whose dad was a stockbroker in Saudi Arabia, and he always seemed to be quite glamorous and different, and that piqued my interest. And he had things like the movies that were around those times, and books about what was going on in Wall Street, Liar's Poker by the brilliant Michael Lewis. And I got some work experience in the stockbrokers in Glasgow in my second year at university, and that really opened my eyes to the world of investing and companies and how they operated. And yeah, from there I was kind of hooked. In terms of the business and our background, I'm one of four partners. So David Ridland, who's the clever one in our business, he does all the analytical work and he's our fund manager. It's myself. I'm a bit of a jack of all trades. We joke that I have many high-vis vests. So I do all the compliance, the client relationships, the business development, run the team, the business, etc. And really we try and free up as much time for David to do the thinking and analysing as possible. But we met at Barclays Wealth. David joined on the Monday morning of the Lehman's bankruptcy back during the financial crisis. You'll probably remember that period well, George. And he joined Barclays to run charities and large segregated funds. And I was really quite a generalist investment manager. So I looked after private clients, individuals and families with money to invest. And I managed the money and looked after the clients and brought in new clients. And then increasingly, I guess the bank wanted to do things in a way that I didn't really want to do things, and same with David. So in 2012, we started talking about what could we do? Could we do something together? And we came up with a crazy idea of launching an investment partnership, which is slightly different to many of the other fund managers that are out there, because we have got private clients, and in essence they came across in the earliest stages of the business, which launched in May 2013. I think we forget the exact date. We had our 10th anniversary a couple of years ago and we couldn't really pin down the actual anniversary date, but it was around May 2013. So basically we brought across some private client relationships that we both had at Barclays, most of whom are still with us today, 12 years on. And we launched our fund, the VT Castlebay UK Equity Fund, in January 2015 with £7.5 million. And I always mention £500,000 because every £100,000 coming into the fund back then, still is now, but back then it was quite an incremental increase on what we had. And really the reason for doing it was, we wanted to run the money the way that we thought it should be run. So, we've got a very particular way of doing that. And we wanted to be accountable for our actions directly with our fellow investors. We wanted to be in control and to plot our own course. We spent quite a lot of time as teams developed talking about the business why. Why do we do this? Why do we come to work? What's our purpose? And we've all kind of corralled around the idea of providing security through compounding. And we think we do that in three ways. We compound the knowledge that we have on companies and sectors and geographies. We compound the returns of the investments that are made and the financial advice that we now provide as well. And then we're compounding relationships and trust. We talk a lot about that and about doing the little things that we think matter that often are now forgotten in the big corporate world that exists in our area. So that's kind of really from where we've come. And we now provide financial advice, we provide discretionary investment management, and we have the fund management side as well. So we've got kind of three distinct parts of the business.
Running a business, as you said, is, you're the kind of jack of all trades. You're balancing compliance, your finance, your marketing, you're managing a team, you're training. How have you, because as the business has grown, so your responsibilities have grown. So one of the questions is, what has been the biggest challenges? And then are there tools, technologies, or perhaps partnerships that have helped you kind of streamline and manage that?
I mean, it's a great question, right? I mean, you only really hear about the good parts of being an entrepreneur or a business owner. You only hear really about the success stories. You don't hear much about the gruesome side of it. The 5 a.m. starts. I was about 4 a.m. yesterday to get a flight to London, and I got home at 9 o'clock last night. And I think that the main thing, George, is really just to get great people around you. And, David and I do it together. So we agree a path with the other two partners as well, who aren't involved in the business day to day, but to have each other, particularly in the early days when there isn't any clients and assets, for example, has been a massive help. And I think also as you develop the business on, getting great people in the team is the most important thing. It's the hardest thing as well, because it can be hard to find those great people, particularly if you're doing interview process after interview process. And what we try to do really is get to know people before they've come into the team, and that's how everyone that is here basically. But I mean, for sure, technology is definitely making things so much more streamlined and efficient. We have a process called Systemology. Have you come across that? So it's a book by David Jennings, and basically, in short, David's the master of this, and he's really driven this. But basically, you're documenting all your processes and procedures on video and in written process form. And that's all held then in a separate hub. So when you have new members of the team come in, they have a reference point for everything that's done within the business, which I think is important, particularly, a business as small as ours, where people do different roles and have different responsibilities. So that's updated and maintained. And we use things like Monday.com for that and for our CRM. So that is used for documenting client interactions and then fund investor interactions as well. We use AI quite extensively now. We have a tool called Saturn AI for the financial advice side, where meetings are recorded on the app, obviously with the client's permission. A transcript is then sort of spat out, and a report is compiled out of all that as well. So if you think about time spent writing up reports following meetings, action points, this is largely taken care of through this app. And you then read through the report to make sure that it is accurate and that the follow-up points are correct. But that's a massive time saver as well. So I think really, the biggest thing for me was have brilliant people, be more efficient with your time as well, and be very clear on what needs to be done and by when, and that's how we've sort of done things so far.
And I guess particularly in our business, but I guess it kind of goes across anything, is that we have regulatory requirements. And I guess for you, because you've got different strands, you've got your financial advice business, you've got your private client business, and you've got the fund side as well, is that regulatory requirements must be quite significant for you. And I know, speaking to some people, they're quite negative. They see regulation as kind of a barrier to growth. I sometimes, I probably see it more from the financial advice side. And I sometimes think that actually there's sometimes opportunities within regulation. So my question from this is, how do you navigate those complexities? Because obviously you've got different strands. And then does it stop you from kind of expanding and innovating, or do you just sort of try and navigate around it?
Yeah, I mean, it's a fascinating topic, George, isn't it? And I think our approach has always been, I mean, the team would be sick and tired of me always going on about do the right thing. And no matter what it is in life or in business, just do the right thing. Always try and do the right thing. And I think with regulation, we take it very seriously. It's just a cost of doing business. It has to be done. And I've always taken the view that we need to embrace that and change and just accept that it's a part of being in business. and we do it to the best of our ability and take it very seriously. So we have a consultant that supports me and is increasingly doing more of the kind of day-to-day updating of processes and procedures and checking files and things. But ultimately, the buck does stop with me as the as the compliance officer and as a partner of the business and part owner of the business. I think there are firms that have a negative approach to it. And I think, I worked in a big bank where they believed that it was impossible for new firms to start because of the regulatory environment. It's not possible because we managed it and other firms have managed it, but it's for sure harder. I mean, the amount of money that you need in capital has increased from when we started. And I kind of view it in some ways, George, as it's part of our competitive advantage. Could we start our business today? Could we launch our fund with £7.5 million today? I'm not sure we could have. So, I guess a byproduct on the selfish side from our side is it's a competitive advantage. Who's coming up behind us? It's going to be harder. But then if you think about the client or the consumer of the products and services being offered by fund managers and investment managers and financial advisors, is that good for them that there are going to be fewer larger firms out there who are owned by private equity and are very focused on, numbers rather than relationships? And I think that is where there's a great opportunity for a company like ours to grow on both sides, the private client side and the fund side.
Yeah, it's interesting because, like, in the previous firm that I worked in, we went directly authorized in 2016, and a firm that I help with at the moment, they were directly authorized in 2020. But then I was recently speaking to someone who was hoping to go directly authorized, and they had no senior manager experience, and really the only route for them was to go via a network. So
Yeah.
I think it's fascinating what you're saying about it's harder, isn't it, for people to come in?
I think the other thing as well, George, is, we were regulated in 2015. So there's a decade of learning that's kind of gone on almost even in some ways subconsciously. You kind of incrementally grow the knowledge of how to do your returns, how to assess risks and document things. So that's part, the softer part that's just happened, I guess, through that process. But for sure, I mean, the regulator now is looking for experience for senior managers, and you've got to demonstrate that. So it's harder.
Yeah. And I guess that comes on to, I mean, I find it fascinating the way that you talked about how you navigate regulation and how actually it's almost like a superpower is where you are and where you've come from. And we're in this world of consolidation, and there's no doubt that that is reshaping financial planning businesses and asset management businesses. And I guess there's two strings to that, is that in terms of financial planning businesses, what you end up with is that kind of those big groups, and we've seen that with insurance companies that just get sort of swept up into one great big business, and you could kind of see that happening with some financial planning businesses, but you're also kind of starting to see that within asset management. So I guess from Castlebay's point of view, and I guess in I guess you've got the two areas or three areas really, haven't you? So how has the rise of consolidators impacted Castlebay, and how do you approach? I don't particularly like the word asset gathering. I just couldn't quite think of the right word, but I guess it's how do you approach this? How do you operate in this changing environment? I guess in terms of, because you've got three, as I say, three different businesses, and you could argue with the funds, if you've got consolidators, much harder to go out. Who do you speak to? I guess in terms of the financial planning, there's a different way of you looking at it, and also with the private client side as well.
Yeah, I mean, so touch on the fund first. You mentioned asset gathering. I think this is really interesting because that's how the industry kind of operates. It's a transactional relationship, whereas we're trying to find like-minded investors and develop a long-term partnership with them. We're in partnership with our fellow investors. And when you have that approach, it might take longer to get money on board and for investors to come on board with you. But what we found is they do stay for a very long time. We have a very low turnover of investors in the fund. So I think for us, we're not interested really in how much money we end up managing. We're not looking to be, to be the richest people in the room or anything like that. We really want the business to perpetuate beyond us in our working lives. I think to do that, we need the team to develop and to take on that mantle. But in a world where you've got super tanker funds, or huge asset management groups who just launch funds to tap into the latest fad or craze, you've got managers that are running money that they don't truly believe in, potentially, whereas we've launched a fund because David is a specialist in UK equities and he has this particular way of running the money. So we've done this to suit David and his temperament and how he does things, rather than to tap into a particular craze. We have seen some firms that we've taken quite a long time to get a relationship where they've invested into the fund. There's one firm in Cambridgeshire that invested, and within 18 months they've been bought by a big firm, and the money then was sold and went somewhere else. And I guess really that's just part of the law of the jungle, George. You have to be comfortable that that's going to happen. I think on the other side of that, we have relationships with that big firm, and we're hopeful that something will bear fruit on that side into the future as well. So I think really it's about, if you spend your time developing relationships with like-minded investors, you're patient and you're good. The numbers have to come through. You have to demonstrate that you know what you're doing. You do it very well. Then the money comes in as an output rather than an input. Again, we meet lots of fund managers. We have lots of fund managers that now approach us to ask us how we got started, and the fund's 10 years old now, so how we've kind of navigated the last 10 years. And I think we were in Edinburgh last week to speak to some investment managers, and someone asked, "What do you think the fund needs to be at now for it to be profitable and to be capable of scaling higher?" And I kind of said, well, it's very difficult now. I think if it's below 50 million, because the costs of running a fund now are much higher as well, I think 50 million is probably the minimum. I did say 50 to 75 million. That's a lot of money, and when firms start with 7 or 10 or 20, it's a long way to get to that point as well. So consolidation, I think, is definitely an issue. Also, the bigger these firms get, what do they tend to do? They tend to all herd around the same very large funds that operate in the UK, or they'll go into passive. And we're in a situation now where I think if one or two of these very big wealth management companies started exiting these funds, you'd have problems with the fund manager being able to raise sufficient money to pay out the investors. And likewise, the big rush into tracker funds and passive investing means that, and the US has grown hugely in the last couple of years, particularly. 74% of the global market is now US companies, and 24% of that is 7 tech businesses. So it's like all these things, George, when you do this long enough, I'm 25 years investing now, you see these bubbles and these crazes that tend to lead to quite bad outcomes for investors. And I think where we have a benefit is we are different. The manager and myself own most of the business. We plot our own course and we just do it with the next 10 years in mind. On the private client side, I think everyone's kind of looking for the same clients broadly, but the clients we have tend to refer us to other people and friends that they know. And again, I think knowing the industry, and particularly locally in Glasgow, the big firms, people that work there aren't very happy. They get treated quite poorly, and clients, I think, can often be treated more to the institution's benefit rather than for their own benefit. So for us, we're looking at people that like what we do, they want to do it with us for a long time, and if they don't like it, that's fine. There's someone else out there that they can go for. So really, we're looking to sort of grow incrementally. We've got a great team, and they're on the lookout for clients all the time. But generally, it's referrals that we get from that area of the business.
Would you say your private client is almost part of your financial planning business? Because I always think there's it seems to cross over, doesn't it? It's that
I refer to that part as the private client part of the business because it encapsulates financial advice, investment management, whether it's advisory or discretionary. And I think the other key thing is not every client either wants or needs financial advice. So they don't have to get it here, and they get charged for what they need. So, I mean, yeah, I think that is just, when I talk about private clients, we look after a number of families, and that's how we think about it. And really, a good job on that side is you move through the generations of families. We're in the fourth generation of one of our longest standing families, and I think that that is really important for us and for the families. They've got a continuity of relationship there.
Yeah, it's so fascinating because I always find it interesting how your business is kind of, when I first met you, we were talking about the UK fund, and I'm going to come on to that now, and then obviously you've built this kind of private client part as well. So I just find that really, really interesting. In terms of the UK fund, I'm just trying to remember in my head what firm it is, but I can't remember what it is. But I think when I first met you and you were talking about it, I think there were few things. One was your openness. So I still remember this kind of slide in there that said, "This is what we invest in. These are ones that we're following, and we like these, but they're too expensive at the moment." And I can't remember the name of the stock, but there was one I think that you'd followed for 5 years, and then in 2020 the
Yeah, sure.
market fell. Yeah, and it really showed me how you approach this. And then I think the other thing that we've also talked about is this kind of ESG side of things, and how that might have changed since we last spoke. So how effectively you don't necessarily talk about ESG, but actually what you're looking for are all the factors that are there. So I guess and that's why I always really, really liked the fund. I think it was very true and very open. So I guess my question, which you've sort of touched on already, is that what inspired you to focus on the UK market? Because surely it'd be easier to do something more global. So yeah, so what inspired you to focus kind of on the UK? And what would you say makes you unique or different to other funds? Because it's quite a crowded market.
Yeah, I mean, it's a fascinating space. I mean, our timing's been absolutely impeccable, George. Since we launched the fund, UK has been, ever smaller part of the global market as the US has become much larger. It's kind of squeezed everyone down. But I mean, ultimately, I think David spent most of his career working in UK listed companies. It's our home market, so there's a natural kind of focus there. But if you think about companies, I mean, we own a number of companies that are really international by their nature. So, 80% of the revenues that the companies generate are overseas revenues. So they're UK listed, but they're not necessarily UK focused businesses with all the revenues generated in the UK. I think, when you mentioned the openness there, how can you think that you're going to develop a trusted relationship if you're not honest and open with someone, right? So, we talk about our mistakes quite a lot because, from my experience meeting fund managers, they would never do that. And I always thought, well, why would you never do that? Because it's a great source of learning. That's where we've learned some of our biggest investing lessons, is where we've got things wrong. And, and our process has developed to take that into account. So I think that's all kind of part and parcel of things. Maybe that's one thing that makes us a bit different. I mean, there are other boutiques out there as well. David is, an owner of the company as I am as well. So, we are directly accountable to our fund investors, our fellow investors, as we refer to them. I think from an investing perspective, we set the bar quite high with quality value, as you mentioned in the introduction. It's a big Q and a small V. And we set the bar very high when it comes to the type of business that we'd want to buy. And again, when you talk about ESG, environmental, social, and governance, we don't label ourselves like that at all. And I think there are many bigger firms out there that launched a whole load of these products to tap into that fact when it was, before COVID and before the war in Ukraine. And it's interesting because, as the war kicked off in Ukraine a couple of years ago, oil and gas shares went higher. The ESG noise became much quieter, much less pronounced. So ultimately, we want a business that can survive almost anything that's thrown at it, because it's got certain characteristics and levers that they can pull to stay in business and survive wars and recessions and pandemics. And so by sort of extension of that, they tend to be quite sustainable. They don't operate in capital intensive business, industries like mining and oil and gas, where you're drilling or you're digging a mile into the ground to find oil or iron ore or etc. So for us, we want businesses that can survive the test of time, but obviously we're in a period of huge technological change as well, and that they need to embrace that change to operate and continue to produce products and services that their customers want to buy. So last 5 years has been a fascinating time for any investor, really. You've got 2020, where Dave and I spent quite a long time in the first lockdown talking about would our businesses survive that period of hibernation? How long was it going to be? We had no idea back then. And I guess as we came through the lockdowns and a vaccine was being developed and rolled out, we managed to make a positive return in 2020 when the market was down double digits in that 12-month period. We've subsequently seen with interest rates rising, oil and gas, or oil price of oil going up, as well as gas prices. The UK markets then performed more strongly than we have. We don't invest in oil and gas, mining, pharmaceuticals, or banks. They're the main areas of the market. They account for most of the market, basically. So we've had to be patient. And you mentioned Diageo waiting 5 years. Patience and discipline are key tenets to any investor's approach, or they should be. We think they should be. And one of the other areas where we're quite different is we don't buy and sell our companies very often. So it can be reflected in a turnover number. So our turnover is 10%, which basically means we hold companies on average for a decade. We're not buying and selling very many companies at all each year. Whereas in the fund management world, the average turnover is nearly 100%, which means that fund managers are selling nearly 100% of their portfolio and buying it back every year. Now, for us, that seems to be much more of a share price speculation than a long-term business investing approach. So those are kind of the main things. We only invest in 27 companies. Our universe of companies that we look at is 67. You referenced that earlier in the conversation. And when we disclose that to our investors as well, we say, these are the companies that we're likely to own at some point in time, as well as the ones that we do own. So they can see if things are changing, there's a guardrail around that. They can see that. And again, I think, we sort of constructed the fund and the approach through the eyes of us as what would we want to see if we were investing in a fund, or the private clients that we've had for 20 odd years. What would they like to see? Well, they want to see all the companies you own. They want to see all the companies you might own, and they want a long-term approach to investing. It's hard when you've got, artificial intelligence companies going up hundreds or thousands of percent based on, an idea, a narrative. Clearly, AI is changing the world now, but the same was true of the internet companies that launched in 1998, 99. It took a long time for companies to figure out how to make the money on the internet to justify, the expense of developing products and services back then. So it's a fascinating time. It's always uncomfortable. This has got all the hallmarks of the bubble for us and the US generally. And when you don't participate in that directly, as we are not, then it's tough. But again, we've got 25 plus years of experience in the team each. We've been through these sorts of periods in the past, and they will happen again in the future. It's how we kind of do that. And we're based in Glasgow. We're the only fund manager in the city. When I started as a fresh-faced 21-year-old, there was about 7 or 8 firms that ran over 100 billion in the city, and they were consolidated by Standard Life in Aberdeen, who then obviously merged some years back. So I think not bumping into fund managers in the street at lunchtime helps. We don't. If you come to our office, we don't have TVs in the office. We're not interested in what the financial news is all about, because it's all 24-hour cycles. We're thinking multi-years and decades when it comes to investing in companies. So I guess those are kind of some of the things we feel that we're quite different.
And I remember when we first met, you sent me a card, and on there was this castle. I'm going to say it all wrong, I'm sure. I've got in my head it was a castle in a bay. And then Why Castlebay?
Yeah. Well, it took us quite a long time to arrive at a name actually for the business. And Castlebay is in the Isle of Barra on in the Western Isles, so off the west coast of Scotland, and it's home to the MacNeil clan originally. So I am a MacNeil from that clan, and as you say, it's a castle and a bay. So you've got the defensive characteristics of the castle and the serenity of the bay, with wild waters being the market outside that bay. And it's interesting because we had a few people that thought the name wasn't particularly good when we started, but we love it, and there's some heritage there. One of our team members hails from Barra as well. She was born and brought up in Barra, and she came across us because of the Castlebay name, and she's now part of the team. So yeah, so that is the answer basically.
Yeah. Oh, thank you. Thank you. So, a couple more questions. One of them, again, you've kind of touched on. I'd love to kind of delve a little bit deeper. Is this idea of defining success and legacy? And, I guess I grew up very much, as a teenager during the 80s. So, kind of had a vision of success, which was, a flashy car, lots of money. And it would be interesting to kind of get your perspective of what does success look like to you personally, and then for Castlebay, and then talk about when you look ahead, what kind of legacy would you hope to leave behind?
Yeah, I mean, it's a good question, George, and I don't really participate in the social media world that exists around us. So LinkedIn is probably the only thing I do. But obviously, with things like Instagram and all the other things that are out there, people increasingly look at someone else's circumstances, which is really a snapshot in time, not always a true reflection of their own life. And they see the flash cars, the big, houses, the holidays, etc., designer goods, and they think, well, that's what I want. And for me, this it's an absolute privilege looking after people's retirement savings, whether it's in the fund or in our private client side. It's a huge responsibility. I have clients who are elderly who have been with me for a very long time, and if I was reckless with their money, then they've got no ability to make it back. So I think the thing that anyone that manages money, and they probably largely do, but they should always just remember who we're doing this for at the end of the day. And I'm very lucky. I love doing this. It's a real pleasure. I've not had the Sunday fear since I started the company. Don't get me wrong. There are things that that you worry about for sure, but I've always loved coming into the office to work. And if I can do that for the rest of my working days, then I'll be happy. And that is genuine. I mean, David, I know is exactly the same with that. If we can do all the things we think we can really well and continue to improve on that, then things like the financial rewards take care of themselves. I think if we could have Castlebay remaining as an independently owned partnership boutique, employee-owned business past our working lives, we'd love that. That'd be our kind of key aim. It's hard to say that for definite we'll be able to do that, because things do change. Particularly our industry changes very quickly. But that's something certainly that we would like to do. We've got quite a lot of work to do on that front. We need a team that would come in to take on the mantle, from us. But there's some great companies, that have done it in the past very successfully. Aberforth have done it brilliantly in Edinburgh, for example, and and we talk to them and we try and learn from them how they've managed to do that at the outset. But ultimately, I want to leave a bunch of clients and families in a better off position than they were in when they came to us and came to our stewardship.
Yeah, I like the way you think about that. And I think it is important is that you can't judge someone's end decision. Someone makes a decision because events happen that perhaps they have to go down the route that they go down. But I think that the danger, back to what we were saying with the consolidation, is that although it may be tempting to sell out to a big consolidator, everything you've built gets destroyed. And so, what is success? And I guess success is it's sticking to what and we live in an intangible world, don't we? But I think if you've got happy clients, as much as you can do that, then that has to be an element of success,
Yeah.
doesn't it?
Yeah. And that is fed through to clients too. You have to tell them when you've made mistakes. You have to tell them what we've learned from that. And I think the other key thing, George, is we invest alongside our clients. So we own big chunks of our fund in our pensions, but we also own some of the other funds that we invest in on their behalf as well. So we're not saying we'll do this for you, but not for us. And again, that happens a lot in other bigger businesses. And fund managers often never meet their end investor because there's maybe one or two other people in that chain that they see instead. So you can lose sight of why you're doing this in the first place. And some don't really care who it is that they're looking after the money for. But for us, I think it's really important, and it keeps us motivated to keep getting better as well.
Yeah. And if someone was thinking, do you know what? I want to start my own business today. Is there something that you wish that you'd known at the beginning that might help them on their journey?
Yeah, I mean, that's an interesting one, George. I would kind of almost invert that, right? And say, if we look at it from the other way, what am I most glad that I didn't know 10 years on or 12 years on? And that's how hard it would be, because I think you need a real a real healthy dose of naive enthusiasm when you do something like this. You need to believe that you're going to win, that you're going to reach hurdle points on your journey. And the reality is it is very, very difficult. It's slower than you want it to be, particularly in the earlier years. There's days when you think that you're never going to make it through to the next year or the next month. But I think if you're doing it with people that you genuinely trust and you like and you want to be part of with them, then that is it goes a long way to helping you through that side of things. I mean, you don't have to employ people to have great people around you as well. You just need to find people that are similar to you to talk to. We've talked for many years, regularly about our own, on both sides, you and me, about what's working, what's not working. It takes trust to do that, I think, as well. But I would say surround yourself with great people, and then as you develop your own team, you want to just get the best people that you can to take some of that off you and to propel you on. Ask for help, get advice. I do it all the time. I meet loads of people that run investment businesses. We meet other fund managers. And I think the industry, especially the kind of boutique industry, the smaller companies, everyone's facing the same challenges and stresses and strains, and they're all generally very happy to meet for a chat. And one thing you mentioned about postcards is you want to try and compound goodwill and do good things for people without actually expecting something back. It's got to be genuine, George, and otherwise people can see through that, I think. So so I think try and be good citizens, try and help people. I was chatting to someone the other day who's looking to start up a fund. They can operate in our area, but very happy to try and help them because it's so difficult to get up and running. So those would be the main things, I think. And then you just got to do it. You can procrastinate, you can put things off, but sometimes you just have to take the plunge. And if it doesn't work, I think in America they celebrate businesses not succeeding far more than we do in the UK, where you're deemed a failure. They see it as the next stage to success. It's one blip on the path to making it, doing something else. And maybe we need to sort of have a different mindset for that.
Yeah, it's funny because I spoke to someone yesterday who is looking at kind of setting up a business or a consultancy similar to mine, and they're based up in Scotland. And they were sort of saying, "Oh, I'm thinking I need to set up a company. I need to do this and I need to do that." And he said, "What did you do?" And I said, "Oh, I just jumped in and I kind of muddled along, learnt stuff, built stuff." And he was like, "Oh, is it as easy as that?" I said, "Well, it's not as easy as that." But I think what you're saying is
Sometimes necessity forms that, right? I mean,
yeah,
I struggled. I struggled where I was before to I think the other thing when you talk about, getting up in 4 o'clock in the morning or whatever, or you're working 12, 15 hours a day, you've got to love what you're doing because then it doesn't feel like work. And
yeah,
I've got family, I've got younger kids. So I have to balance work with family, and I don't want to look back and say, oh, I missed all these things because I was always working. And David's very similar to that, and we try and do that with the rest of the team as well. You've got to love what you do, but I think if you're open-minded about things and about people, there's so much more comes to you. You know, we often operate where everyone's trying to protect what they have rather than actually open up and help. And it may well be that this person does something and you two become, you know, quite friendly and things develop with your relationship into the future. You know, and that's how I think, you know, things often go. You just take the plunge and do it.
Yeah. I've got to say, I could speak for forever. And honestly, I've really enjoyed it. Thank you so much for taking the time to come onto this podcast, hearing your insights, kind of, you know, a chance for you to talk about Castlebay, talk about the fund, but also your experiences. Amazing, absolutely brilliant. For anyone who's listening today, you can go to castlebayinvestments.com and they'll have more information on there. And then to the listeners, please stay tuned. There's going to be more exclusive content coming in upcoming episodes. So thank you so much for listening. Thank you so much.
Thanks, George. Really enjoyed it as well. Thanks a lot.
Okay.